Hi everyone, in this video I'm going to be discussing the Bollinger Bands indicator. Now, there's a few different ways in which you can use this. It can be used for reversals and for trend trading. It consists of the upper Bollinger Band, which you see here, the middle Bollinger Band here, and the lower band here. If you were using this indicator for reversals, you would be looking for price to breach either the upper or the lower band. In the instance when price breaches the lower band, that would be considered a potential buy opportunity. If the price was to break through the upper band, that could be considered a potential sell opportunity. Alternatively, you can also use the Bollinger Bands for breakout trading, which we do the complete opposite, such as when price breaks through the upper band, instead of looking for a sell trade, we would look for a buy trade, a breakout trade. In this instance, it obviously would have been a good choice because following a breakout of the bands, price did fly up over 100 pips. Same here, if price breaks through the lower band, you could take a breakout trade short, which again would have been a really good trade for up to over 200 pips. People often use the middle band as somewhere to place their stop loss or to exit a trade. For example, this is a nice ranging market here, which probably would have been a good time to take reversal trades. For instance, the price broke the lower band here. You could have taken a buy trade, exited at the middle band or even the upper band. If you did exit at the upper band, you could have then immediately took a sell trade and exited either at the middle or the lower band, and again could have taken a buy trade here when price broke through the lower band again and exited at the middle band or the upper band. So in this scenario would have been perfect for range trading, whereas here there were two really good breakout trades. In terms of this trade here, you could have had a stop loss, a relatively tight stop loss. Once price broke through the band here, you could have had your stop loss probably around here, I would have said. That would give you a stop loss of 40 pips. But when you look at the overall risk to reward of, over 250 pips, it's really, really good risk to reward ratio on that trade. If you were using if you did enter, let me just mark it on the chart. If you did enter there and you were using the middle band as a stop loss level, you would have got taken out early, which would have been disappointing. You could have re-entered here on this breakout, but you just give yourself unnecessary risk. Ideally, you want to get in at the earliest opportunity and ride the move as much as possible. Perhaps using the upper band in this instance for stop loss would have been ideal because it gave the trade more breathing room. Either way, that was a good trade, as was this one here. The hardest thing about the Bollinger Bands is defining when to use it for reversals and when to use it for breakouts. If you've got good money management, you could probably take all of the signals as breakouts or all of the signals as reversals and still have an edge. However, I personally wouldn't do that. I'd want additional confirmation from another indicator.